All right, guys, go ahead and start it off. Go ahead, group.
What's happening? We still don't see your video, but
Yeah, go ahead.
all right.
Sure. Dave, you just want me to give a quick introduction on...
Yeah, quick introduction of who you are, what's going on.
Sure. Hi, everyone.
How'd you get started?
Sure. Dave, you want to give me an intro, or do you want me to just start?
Go ahead.
All right, so this is Jack Krupe. I'm Managing Director of PRP Advisors, which is our asset management platform. I also have Will Bonatti with me. Will runs note sales for the Gemini platform. PRP owns Gemini, but all of our loan sales run through the Gemini brand, and our institutional purchases run through the PRP brand. So if you see two different email addresses, that's why. I've been in the distressed note space since 2008. I started really right at the bleeding edge of the crash. I worked at a fund for about 2 years, then left in 2010 and started raising money from friends, family, and buying a couple loans at a time. Over the course of the next few years, I initially raised $2 million from one investor. And then over the next 2 or 3 years, we ended up partnering with an institutional fund that originally gave us a $10 million joint venture, which they referred to as a science experiment. And that 10 million grew to 20 to 50 to 100. And to date, we've purchased over 700 million in loans. It's over 7,000 loans we purchased. We own over 6,000 loans right now. And as part of our portfolio management, we are regularly selling loans. So every month Will puts out an offering, and we're very happy to work with the note buying community, and hoping to expand our buyer base and have a larger group of consistent note buyers. Will, do you want to kind of tell your background and how you?
Yeah, sure. Of course. So. Hey everybody, Will Bonatti here. So I was a financial advisor for many years and jumped over into real estate I guess it's been about 3 years now, and was just really attracted to the note space because it's a paper business mostly. So I just really understood that and got it. So was running my own small portfolio for about 1.5 years, 2 years, and buying some stuff from Jack and his team, and just being here in Manhattan, New York City, was an opportunity to come on to help him out. So been running his trade desk now for about, 6 months? So in September, with the objective of consistently putting out some NPLs to note buyers that are buying one at a time or 10 to 15 at a time. And the idea is just to have some consistency with that. So that's kind of my story.
And Tim?
Hey, can everybody hear me?
Hello.
Can everybody hear me?
Yeah, I can hear you.
All right, just kidding. So I'm Tim Maines. I work with Jack and Will. I work remotely out of Pennsylvania. Got started in real estate probably about 15 years ago as property management. Later did some sales, was a landlord, had my own rental properties. Got back with Jack and Simon and Gemini around 2012 when I was up in Alaska, and started doing some analysis work for him. My video just went dead. But anyway, so today I'm an analyst for PRP Gemini, and also handle the REO properties on the back end. So I do like reviews and try and put values on properties for our institutional purchases, and then also kind of assist everywhere around the business with valuations and things like that. So I sit behind a computer most of the time.
All right, so I'm going to go ahead and start off. Jack, when you first started the fund, how did you grow from where you were? What were you buying? Were you buying from big banks? Were you buying from small people? A lot of people in the room are probably in the same boat you were when you first started.
Almost all of the deals we did were from other funds. And even now, a majority of our deals are fund-to-fund transactions. There's really only 5 or 10 groups that buy the large bank direct deals, and they'll sell to smaller funds who then sell to smaller funds. So, back in 2011 and 12, I was buying low balance one-off loans from groups like we are now. I mean, I bought from Condor, bought from all of the just regular note sellers, and is just always hustling, looking for deals, doing due diligence, finding the diamonds in the rough, and just establishing myself as a buyer who was capable of closing and did what they said they would do, and really grew from there.
Awesome. With regards to the note space and all that, how many loans do you expect to be selling this year in this space?
Well, there's really 2 different channels of sales. We do some larger, what I call institutional sales. We sold $30 million in reperforming paper to another large fund, and those loans were all 12 of 12 months current or 24 months. They've paid each of the last 24 months with credit scores in the upper 600s, low 700s. So those are different types of trades through the channel, through the Gemini channel and Will. We probably would sell anywhere from 10 to 50 loans a month, depending on things. So certainly we have enough in our portfolio to sell 500 plus loans at least this year, and we're consistently buying as well. So there's no shortage. There's no shortage of product. It's just a matter of matching the right buyers to the right type of non-performing loans and the right price point. Our paper is generally a little bit higher quality than some of the stuff that I've seen out there. We don't have a lot of these $20,000 assets, so our price point is in some cases slightly higher than others, but those have also paid within the last 12 months. So I think especially for beginners, I'd like to think our product is a little safer because we have all of our collateral. Our servicing notes are intact, and it's a pretty smooth process. Will, feel free to jump in a little bit.
Yeah, real quick. One pause, real quick. Whoever's on the phone, could just mute your phone. It automatically connects to whoever's on the phone. So let me. All right. I'm going to let Will go ahead and take off of that, but I want to also make sure we also answer the question a lot of people ask, why do you sell inventory versus another inventory? Are you selling only bad stuff? That's a common question people have.
Yeah, sure. That's a really good question. So the stuff that we're selling is primarily all of the NPL stuff, right? So we're buying large pools of BK, performing BK, and reperforming loans. And so a very small portion of our portfolio falls out of there into what's considered NPL or non-performing loans. So those are the loans that have a higher touch, have a higher servicing, not necessarily cost, but it's higher touch, right? So we are perfectly capable of taking it all the way to REO and managing a rehab, taking it to a retail sale. And Tim does a really great job with that. But the stuff that is freshly NPL, there's an opportunity to sell it. So it's not that we are highly motivated. It's not that it's the bottom of the barrel garbage that we don't want. It's more of an opportunistic play. Does that make sense?
Yeah, absolutely. So I'm going to go back to Mr. Maines. Can you describe, going back to the beginning of where these people in the room can grow and they're on the webinar? Tim, can you explain how you kind of grew from where you and Jack started 6 years ago or 5 years ago now to where you are now? And how do you kind of decipher what a good deal is back then and how to decide what deal to buy?
Yeah, I think for people just starting out or for people who've done a couple of these deals, I think, most people understand the basic parts of the system where, you really need to have a firm grasp as to what the underlying house is worth. And then, you're looking for pretty much the best discount that you can get to that price to purchase it. I would say just keep your overhead low. Almost every part of this business you can outsource. So you can really run it as a one-person shop and even run it part-time. But, just be really firm with the values you're getting. Use pretty much all the free resources available to you to be comfortable with that. And then, then it comes down to not being scared to lay down some money and go for it. The worst case scenario happens, you get a house back that you've never seen the inside of. And, as long as you're pretty firm on your values, you're always going to have something worth a good amount of money. So I think that's it. Once you get one or two under your belt, you'll get comfortable with it. And, you can go from there. You don't really need to, do 100 of these a year if you're just one person to make a boatload of money.
Okay. How do you typically evaluate a property if you're not in the same state as it? Real estate's local. How do you evaluate property in Ohio, Tennessee? And how do you confirm that value of what you know of?
I like how you used my own quote against me there, Dave. Thank you. Real estate is local. So the best things you can do, you got a lot of free resources online. And then, when it comes down to it and you get really close to purchasing something, you call up a local agent. But you have to be careful when calling a local agent. You don't really know what their background is, what types of houses they're used to selling. So you really have to take everyone's opinion kind of with a grain of salt and then research it,
Awesome. So we're going to go back. I think you've basically grown, you and Jack grew this company into something much bigger. And as Jack said, kind of got a sweet kick a few years back to supersize it and grow from where you were to where Jack is now, sitting at a table, not in his bedroom kind of thing, where a lot of us start from our laptop and want to work up to that big time area. A lot of this comes into with finding money and stuff like that. Joint ventures and whatnot. So from your experience with joint ventures, how did you find about commencing joint ventures of switching over this so they can be buying inventory with you guys?
It's a great question. I think you've got to have your elevator pitch down. I'd previously been a real estate investor, and I imagine most people getting into notes are already doing some other type of real estate. So it may be a different play on real estate, but hopefully most people have already done some of this for a rental property or to flip a house. So I think it's just you got to break it down into simple, concise bullet points, really, that we're buying at this discount to market value. This is what it takes to foreclose. But really, just walk someone through the process. If you're raising money from a more sophisticated investor, there's more technical questions. If you're raising money from your rich aunt or grandmother, then you need to be simple. Sometimes offering too high of a return will scare people off. So you don't have to go and offer 50% because it makes it seem inherently risky. The last thing is track deals. If you're brokering a deal to someone else and you can their results and show actual deals. The first $2 million I raised, I showed 5 of my own deals and I showed 10 deals that I'd brokered or just that I knew of through other people. And I got their permission and I disclosed that these weren't my deals, but these were deals that I had tracked, and I showed the purchase and the exit. And most investors were completely comfortable just seeing those as comparable deals as part of my overall pitch. Will, you want to jump in?
Yeah, I mean, I would definitely say keep it as simple as possible, because a lot of times you'll lose people in the details. And have a solid story. You got to be a good storyteller. So just being able to convey an example that is interesting and simple will help. I think one of the biggest things that limits opportunities for newer investors or investors that are doing 1, 2, 5, 10 deals at a time is your cost of capital. So, if you're saying 15% to your joint venture partner, it's going to be a little bit more challenging to get into deals that are always going to yield those kinds of returns. And so one of the reasons that Jack and Tim and team have grown to the extent that they have is because their cost of capital is really low. So people are still generally going to be really happy with a high single-digit return or low teens. So, and like Jack was saying, like you'll scare people off saying that you can get 15, 20, 30% returns. Like as a financial advisor in my previous life, like, that's aggressive, that's scary. Like, what are you doing? How's that possible? Is what people think when you're talking about, 15, 20% returns. So people associate that with risk. So, it's relatively easy to be raising money in high single digits if you have the right story. So I would say that is going to help you scale.
Awesome. This is more kind of for Will. Will, with your tapes, what we want to call, which is a list of assets, do you allow people to cherry pick, or do we have to buy a bunch of notes that the big banks play with?
Nope. The tapes that I put out generally have between 30 and 50 loans, and you can buy one loan, or you can buy the whole tape. People always ask if they can get the pricing on the volume, and yes, there is some room there, but you can just buy one loan, and like I said, you could buy the whole tape if you want.
Awesome. What is the process of when you're buying a loan? What's the process of us from getting the tape to actually wiring the funds? What's the typical process, and what kind of due diligence periods do you guys allow?
Sure, great question. So on the offering email that I put out, I actually have the bidding process on there, as well as some pricing guidelines as well. But in general, when you have identified one loan or multiple loans of interest, we would expect that you have checked the taxes and gotten some sort of online valuation to be able to make an indicative offer. So once you've made that indicative offer, whether that's via email or giving me a call, we'll have a pricing discussion. And if we are close to a number that we can agree on, at that point, you would want to do what's considered to be final due diligence. So that's ordering an O&E or title and getting your final valuation done. So that could be calling an agent in the area. It could be getting a BPO. And if it's one loan, we would expect you to be able to do the final due diligence in, say, 3 to 5 days. So from indicative offer and pricing agreement to funding, if it's one loan, is going to be 5 days or less. If it's multiple loans, then that time frame is negotiable. We've done trades where there's indicative offers on 15 loans, and we had it was like a 25-day funding period or commitment period for them to do due diligence. So, but if you're utilizing vendors like Title and any number of the BPO sources, all of that can be done, inside of 72 hours. So,
awesome. So once we get a bid offer going on, and we're now doing our due diligence, we're pulling an O&A, which is like a mini title. and then we're pulling our BPOs, doing our drive-bys. What happens with collateral? What do we see collateral, and what can we do with collateral?
Right, great question. So after your indicative offer, if we're in agreement on pricing, and we post, then we will share the electronic collateral files with you.
Awesome. So what we often do is we'll take that collateral file and send it to a custodian to review and see if there's any missing allonges or assignments or anything that we're missing that we could utilize to come back to you guys and ask you questions. So we can have a clean chain of assignments so we can foreclose appropriately if we need to. Bidding process. Do you guys have an open bidding? Do you guys set bid pricing? How do you guys accept bid process once the tape is received by us?
Right, good question. We have rolling auctions basically. So first come, first serve. If we get to a number that works for us, then we'll sell it to you. There's no like due date. So you'll see sometimes you see a loan or loans that are still available months later. And it's counterintuitive to most people say, oh, well, that loan should be selling at a greater discount now, but it's actually probably going to be selling it at a premium because we've moved it downfield. We continue to work our loans. So I did want to comment on the previous thing about collateral in that you can send it to, say, Orion or Richmond Monroe to review prior to closing. And I think for a newbie investor, that is really important and really valuable and can vary by seller. So like for us, like everything that we buy goes into our portfolio with full intention of taking it all the way to a resolution. So 99% of the time, there aren't going to be any material issues with collateral. However, other sellers oftentimes are just brokering loans. So they'll buy it in bulk and then they'll piecemeal sell it out without really even taking possession of collateral or without even going through collateral with a fine-tooth comb. So knowing who you're buying loans from is really important as part of that process. And so like that's one way that you can really get burned as a newer investor is having material collateral issues that you just don't know about until you've done quite a few deals because every loan is different.
And just to add, our collateral is actually stored at U.S. Bank. They handle most of the larger funds. Their collateral is either stored at Deutsche Bank or U.S. Bank. So there's a large facility in Minneapolis, and all of our original collateral files, original notes are stored there, and that's where they sit. So the collateral is in a safe place. Generally takes a week or so after purchase for the collateral to ship, and it'll ship directly from U.S. Bank to where either your servicer or whatever vendor that you're using to handle your recording.
All right, great. Well, we're about a minute away from my free, so we're going to actually close down for a minute, bring back the webinar, and Shanti has to go somewhere, so she, real quick, to the chat, we're going to come back, and we're going to have an open discussion for everyone here, and anyone's on the chat to answer questions. So we're going to close down for a minute, and reopen back up, everyone, so just use the link we had before, and we're going to close down and reconnect. Being cheap, that's how we run it. All right, guys.